Hello everyone, this is Madhvi Mehta from Kotak Securities Commodity Research Team and I welcome you all to another session of Commodity Catch-up where we'll discuss major market developments as well as price outlook for major non-agriculture commodities. Well, commodities fell sharply last week and that was largely due to firmness in the US dollar. Concerns about health of European and Chinese economy and increased volatility in financial markets also weighed on commodities. The US dollar index rose for the second time in 3 weeks and tested 1 month high. The US dollar edged up on safe haven buying and rising bond yields, which more than offset mixed US economic data and mixed comments from Fed officials. The major event last week was FOMC minutes. However, it failed to give much clarity about Fed's monetary policy stance and highlighted the ongoing debate between growth and inflation. FOMC minutes showed that the central bank wants to avoid inflation from becoming entrenched, but also wants to avoid a situation of over-tightening and sees the need to slow down rate increases at some point. Comments from Fed officials also painted a mixed picture. Some Fed officials maintained support for aggressive rate hikes to control inflation, while some believe that the pace of hike is subject to debate. Mixed US economic data also clouded outlook for the economy. US housing data disappointed while retail sales were flat, but jobless claims unexpectedly fell, highlighting strength in the labor market. Overall, with US inflation still out of control, Fed is expected to continue with rate hikes. However, with increasing pressure on US economy, market players expect them to slow down soon. Market expectations indicate possibility of a 50 basis point rate hike at the upcoming meeting in the month of September. The US dollar saw renewed safe haven buying amid concerns about health of Chinese and European economies. China's industrial production and retail sales data released last week disappointed. Meanwhile, Chinese central bank's move to cut key lending rates and government's efforts to boost infrastructure spending was seen as a sign of increasing stress in the economy. Adding to concerns about health of the economy was power crisis in certain regions which hampered economic activity. Concerns about European economies rose amid higher inflationary pressure and worsening power crisis. UK consumer prices rose at the fastest pace in 40 years last month, while Eurozone inflation was confirmed to have risen at record high pace. Power prices in Europe are increasing amid higher cooling demand due to hot weather and reduced natural gas supply from Russia and US. Rising prices has also impacted economic activity, denting outlook for the economy. Overall, the US dollar is still seen as the go-to asset amid increasing uncertainty about health of major economies and amid expectation that Fed may continue with rate hikes. Market players may continue to look at US economic numbers and central bank comments to determine Fed's next move. Next cue may come from the annual Jackson Hole Symposium on August 25th to 27th, where Fed chairman may discuss US economic outlook as well as the monetary policy stance. Also in focus will be US second quarter GDP data as it will revive the recession debate. US GDP growth fell for the second consecutive quarter in Q2 and we need to see if there is any major revision to the advance estimates or not. Let us now start with individual commodities. Gold ended lower on firmness in US dollar, higher bond yields, continuing ETF outflows and concerns about consumer demand in India and China. Global growth worries, inflation concerns and geopolitical tensions, however, lend some support. Going ahead, gold may remain choppy amid mixed factors. However, Fed's tightening expectation may keep US dollar supported, which may weigh on gold prices. Silver also ended lower amid concurrent losses in gold and industrial metals and amid mixed ETF flows. Silver may trade sideways to lower as Fed's tightening outlook and concerns about China may weigh on commodities at large. In industrial metals, copper weakened earlier in the week on disappointing Chinese economic data but recovered from the lows on hopes of increased infrastructure spending. Copper may remain under pressure amid increasing uncertainty about Fed's monetary policy. Aluminium gained earlier in the week as power crisis in Europe and China led to production shutdowns. However, it failed to hold on to the gains and ended lower on concerns about health of Chinese economy. Going ahead, aluminium may trade with a positive bias amid fear of additional output cuts in China and as a WBMS report noted a deficit in global market in the first half of 2022. Zinc prices jumped to 2-month high on announcement of closure of a smelter in Netherlands from 1st September. Zinc, however, shed all the gains and ended sharply lower as supply worries were offset by demand concerns. Zinc may trade mixed as support from Europe's energy crisis may be countered by fall in steel demand in China. Lead also ended lower on muted downstream demand and rise in social inventory in major regions in China. Going ahead, lead may see some recovery in coming week on expectation of improved lead acid battery consumption. Moving to energy complex, NYMEX crude fell last week amid firmer US dollar, choppiness in US equity market and prospect of higher supply from US and Iran. Crude, however, recovered from lows on expectation of higher alternate demand and sharp drop in US crude oil and gasoline stocks. Crude may remain choppy as demand risks counters persistent supply concerns, but general bias may be on the downside amid increasing growth worries. Lastly, let's talk natural gas. Natural gas was the outlier which ended with sharp gains last week. Natural gas benefited from higher European gas prices, robust cooling demand in US, erratic US gas production and smaller than average buildup in gas stocks. Natural gas may remain volatile as US weather and Europe's power situation is assessed. However, buy on dips is recommended. Well, that's it from my end. I wish you all a very happy trading week. Thank you.